Awesome. Wonderful, wonderful. Good afternoon. I see people are starting to jump in here. Thank you again for joining us this afternoon or this morning, depending on where you are calling in from, or this evening if you happen to be in London or beyond. Welcome to another conversation with Plugged In for Impact Alpha. My name is Sherrell Dorsey. I'm your host. I'm a contributing editor here to Impact Alpha. And I'm really excited about this conversation. Our series every single month kicks off the first Tuesday of every month, hyper focus on this conversation of climate tech equity and the LPs and GPs who are continuing to define this space amid what we know to be, which is very chaotic times. And so with that, there's always great conversations to be had with a sense of hope as well as strategy. And we have today our guests from Symphonic Capital, Sydney Thomas, as well as Shruti Shah, both coming from very unique backgrounds and here to really help us chat through why LPs are still seeing an opportunity in equitable climate tech amid a lot of the federal changes that are happening in the space. So thank you all for joining us this afternoon. Feel free to shout out where you are tuning in from in the chat. We're very interactive here. We'll also try to get to any questions towards the end of the conversation. So just let us know where you are, as well as what firm or organization you represent. And just a really quick shout out to my boy, Andre Blackman, long time connection here, who I believe did let Sydney know that he'd be in the room. So excited to see you, as well as Becca Shepherd. It's been a while. Good to see you. Sydney and Shruti, thank you and welcome into the conversation.
Thank you so much for having us.
Absolutely, absolutely. And for those of you who are actually new to the Plugged In series and to Impact Alpha as a whole, ensure that you are subscribed to Impact Alpha. Amazing briefings every single day, as well as if you become a member, you're getting incredible reporting, access to data insights, all of our subscriber calls and conversations. And we've got amazing events coming up. On the 4th, be in North Carolina, a lot of our film work on equity in various festivals, including the Boston Film Festival that's coming up as well this month. So lots of amazing things to be connected to. All right, let's go ahead and dive in. Oh wait, Lisa Dyson, I see you as well. I'm sorry, y'all. I just see so many friends through the years that are popping in. So it's good to see everyone. Alrighty, so Sydney, let's start with kind of just sharing a bit more about your background. You and I connected when I was running the Plug, and at the time you were working for a very prominent firm, and then you branched out and created Symphonic Capital with a very specific mission. So let's dive a little bit into your background, and then Shruti, we will turn it over to you to talk about how you've landed here and some of your mission behind Symphonic as well.
Yeah. Awesome. Thanks so much for having us, Sherrell. I think I like to call the launch of Symphonic Capital almost like a homecoming. I feel like there's so many people who I got to meet and really vibed with early on in my earliest of days in venture who when launching my own firm and was able to actually start building with. One of those was obviously Shruti, and we'll get to that. But others include you, Sherrell, Andre, you as well. And so just happy to be here alongside so many friends. Um, and the thesis was, I was at a firm, helped it scale from about 10 investments to about 200 some odd investments and about 10-ish, 15 million AUM to hundreds of millions in AUM, and got to see really how the sausage was made. I was working in pre-seed. And so at the earliest stage of launching companies, you're also kind of like everyone's friend because everyone wants to mark up your deals slash be a part of, get to see your deal flow slash just wants to get into the know that you're a part of. And so my job was actually ecosystem building, literally that was so much of my job. And so I was able to see all of the different points of venture and understand how I wanted to fit into this larger ecosystem. One of the things I saw happen was these founders who I really enjoyed working with started getting lost in the sauce. The Series A firms weren't really understanding what these companies were building because these Series A firms were largely run by, lots of people who were very privileged who didn't really understand what was going on for this 99% community that I was really focused on investing for, and realized that I actually needed to have a more concentrated approach if I was going to serve these founders more effectively. And also realized like I had a huge, what is it called? Like blind spot in what I knew, in that I'd actually never been a founder before. And so when launching Symphonic Capital, Shruti was literally one of my first calls where I was just like, this does not work without your support. Come into the deep end with me, please, please, please. And she said yes, because her background, and she'll get into it, for all of you all to learn as well, is on that founder side. She knows the founder journey intimately. And so is able to coach those founders, from those earliest stages to get them to a place where they have a little bit more ownership and power and agency. So that's a little bit about Symphonic. That's a little bit about me. Excited to dig in.
And
And I'll
Shruti, yeah, yeah, Shruti, would love to hear a little bit more about your background.
Yeah, of course. Thank you so much for having us. So I'm Shruti. I'm Sydney's partner at Symphonic, and I'm really excited to be here today. My background, as Sydney mentioned, is as a founder. I guess you could say before I was a founder, I was a public school teacher, and ended up getting really interested in the role that technology was playing in the classroom. Joined an early stage venture fund in San Francisco that was focused on ed tech. And like many, I guess, 25-year-olds at the time, who were living in San Francisco in 2013, I thought, well, I'm going to start a company. And I ended up starting a company totally unrelated to education. It was a used furniture marketplace called MoveLoot. We helped people buy and sell used furniture, and learned a lot on that journey. I was part of Y Combinator, ended up raising over about 3 years, $22.5 million over 3 rounds of funding, and really experienced the highs and lows of what it means to build a startup. And so really thought that I, might use that experience to jump into either another startup or continue to take on operating roles. But when Sydney and I met in, I guess, 2016 or 2017, when I was an entrepreneur in residence at Silicon Valley Bank, we became great friends. And when she wanted to launch Symphonic, I was hesitant about whether or not I was ready to be an investor, or whether or not I'd even be good at being an investor. And she, with her encouragement, I think, landed here, and it's been just an incredible journey since.
Amazing. Thank you both coming from very different backgrounds and perspectives, but having a very hands-on approach to what it means to invest in underserved and overlooked founders in this space. And so, and we're going to just kind of dive in and really just address the elephant in the room. We know that there's a lot of climate tech investors who are sort of in this wait and see mode, especially as Congress and the Trump administration is finalizing budget plans, and various initiatives that were initially slated towards a lot of these climate projects, and some of these incentives that were geared towards creating more clean energy options and systems in the states. How are you all approaching this moment? And what are you hearing from your colleagues or other LPs in terms of, their appetites for climate investments? And even as we think about like the portfolio companies you all are serving or targeting, whether or not there's even interest in even deal sharing, as we're looking at, just the funding landscape really being a challenge right now.
Yeah. Okay, I'm gonna kick it off just really quickly and then want to have Shruti dive in because really climate is Shruti's expertise. And we back up a little bit around Fund One. The thesis was, how are we investing in companies that are closing access gaps around health and wealth for overlooked communities? And a consistent theme that we saw show up was that climate intersects with both of these very aggressively. And I think Shruti has some great kind of like more visual examples to demonstrate that. But, we are that's how we think about investing on those two sides. So I wanted to give also a little bit of a preview about Symphonic first before we dig into this, and I'll pass it over to Shruti now.
Yeah. So a couple of things I think on this point, just kind of painting the broader picture, a lot of the capital that's gone into climate finance climate investing specifically has really been around climate mitigation. About 90% of the capital goes towards technology that's really focused on, how do we capture carbon from the atmosphere? And I think what many investors are starting to realize is that, well, climate change is here, as we all know. We're all living with the effects of climate change. And there's a real opportunity, whether we're talking about climate and wealth or climate and health or just climate adaptation generally, to invest in products and services that are helping communities adapt to a changing climate. And that can look like a whole variety of things. It could be insurance tech, parametric insurance, which, provides a different type of insurance product for a community that might be impacted by a disaster. It could be a different type of underwriting. A lot of data and analytics platforms for detecting disasters. It could be products and services that are focused on helping employees adapt to extreme heat. And so I mention all of this because I think that the opportunity is actually not just in climate investing. I think it's actually in climate adaptation and mitigation, climate adaptation and not mitigation, because so much of the private capital has gone to mitigation for so long, and we haven't solved it yet. And so if this is kind of where the future is headed, we have to start thinking about what are the things that need to exist in our society to be able to adapt to a changing climate. And then I think the other piece that is really important to emphasize, particularly for LPs, in my opinion, is that this is actually a risk mitigation strategy. So many limited partners are investing across asset classes, which means they hold real estate assets. It means that they hold insurance assets, they hold bonds. And all of these things are going to be impacted by climate change and by natural disasters that are caused by climate change. And so investing in products and services that allow them to mitigate that risk is actually extremely important.
Thank you, just for laying that out. I also want to kind of backtrack a little bit here, because you all are in process of closing this fund, and so can you just chat a little bit about some of the goals for this next round of funding?
Yeah, I mean, when we think about one of my friends from business school had a mentor who had this great quote, and I don't remember who it is, but the quote was brilliant, where she just said, if the goal that you have is accomplishable within your lifetime, then it's too small. And that's exactly how we think about things at Symphonic, which is that our goals are to close healthcare disparities and the racial wealth gap in America. Will that happen in our lifetime? Hopefully, but also probably not. And so we are tracking actively, though, towards those impact metrics on our end with every single investment that we make. We think through, okay, if we're going to make this investment, what are some of the milestones that we want them to hit that actually shows that we're tackling one of these two pieces? And exactly to Shruti said, when we think about climate adaptation, we are really sensitive to the fact that, especially in places like New Orleans, which is where we're going actually in a few weeks, are places where a lot of Black people own homes, and those homes are uniquely, uh, vulnerable to the climate change the life that we're now existing in, which is within climate change. And so how are we thinking about like, if that Black wealth is held up in a home, how are we actually ensuring it in a different way that allows them to access that wealth, even if that home, floods or they have to move or all of these different pieces? And I'm just like So grateful to have Shruti on the team because that example explicitly is actually one that she shared with me. And it's one that I think has helped allow us to evolve our thesis at Symphonic so that we're really being not just reactionary, but really proactive on how are we maintaining some of the wins that we already have, even though they're not as many as we want, and continuing to chip away at those other gaps that exist.
And what's interesting too is like trying to get to scale as quickly as possible, or helping companies get to scale as quickly as possible. I think that it's very different when you are investing in sort of general things that aren't uh, really affecting people's lives, right? When we think of like productivity tools or like, you know, SaaS tools, but when we're talking about products and services or tools or businesses that are trying to mitigate things that really affect quality of life, it's again, it's got to be quick, you know, quick decisions, quick money, quick resources, quick partnerships, you know, rapid deployment or what have you, which is a big task. It's a really big undertaking, especially when we think about the long-term support that founders need, you know, beyond that initial investment. And so I'd love to learn a little bit more. And maybe this question is for you, Shruti, just as a firm that's focused on, you know, the pre-seed, the seed stage investments. What role do you all believe that, you know, early stage capital plays in accelerating the development and the deployment of impactful climate change technology, or climate technologies, excuse me? And, you know, how are you all supporting portfolio companies beyond just providing that funding?
Yeah, great question. Well, first, I think early stage capital is so critical, particularly for products and services we haven't seen before, especially ones that I think have the ability to have big impact because they have the ability to scale. Um, and we have a very structured approach to the way that we work with our portfolio companies. So when our portfolio companies join the Symphonic portfolio, we basically work with them on a series of metrics that they're going to track over time with us, so that they're able to, I think, set some guideposts around where they are currently and where they're headed. And we give them some benchmarks. So based on what we're seeing in the market around raising more capital, you know, what is that actually going to take? And so I check in with them every 2 weeks, and we look at our kind of data dashboards, see how things are going, try to troubleshoot when there are problems. But we're not trying to track everything under the sun. I think the biggest thing that we can offer our founders at this stage is helping them think about what to focus on, and why. And I think that is probably, I would think if you talk to our portfolio companies, that's probably what they would tell you, is that we've been very helpful in helping them structure what growth could look like. And I think part of that is probably some of my Y Combinator training, where I was very focused on a few key metrics to get to scale. And then, you know, we also really work hard to try to connect them to partners, to potential customers, to co-investors. Sydney, as she mentioned, has been an ecosystem builder for a long time and has an incredible network of co-investors. And so we do love to co-lead rounds with people that we think are awesome co-investors and who can also bring a lot to the table. So all that to say, I would say that we're very, very hands-on with our companies, and many of them are in a place where there's still a lot to figure out. And so I think we really see our role as being a helpful guide on the side to make that possible.
Thank you, just for that background and framework. I'm also just kind of paying attention to the chat here. In a few minutes, we'll also switch over to Q&A. So if you do have any questions, feel free to either drop them in the chat, or right below there is a little box with a question mark. You can drop your Q&A there as well if you have any questions for either Shruti or Sydney, or just generally as we continue to explore the conversation. So I want to go back to the conversation on, you know, partnerships, just ongoing capital. And, you know, we know that initial pre-seed or seed investment is really that kind of first opportunity for founders to really prove out their models and to see, like, is this going to be viable? Can this scale? Is this something that, there's a customer base, there's recurring, revenue or a sustainable business here. And of course, a model that is attractive to investors, for long-term, profitability, at the end of the day. And I want to go back to these policy shifts, because when we look at, some of these more, and in climate tech, again, we're going to kind of use that term very broadly, because as you all mentioned, things like insurance, I live in Florida. So right now there's a lot of conversations about insurance centered tech companies, because the insurance industry is changing, right? Or we look at, the unfortunate fires that happened in Los Angeles. Again, insurance is changing very drastically as we start to look at, climate mitigation and risk and resiliency. And so the term very, very broadly, but as we look at these, these policy shifts and the long-term nature of climate tech investments, how does Symphonic Capital assess risk and identify, promising early stage opportunities in this sector? Shruti, you kind of, you kind of hinted at this, helping founders through metrics. But how are you all looking for founders, or what qualities are you all looking for in founders as well as their ventures, especially during a time that is a bit uncertain? Just when we look at the market dynamics and the impact of, whether it's getting additional follow-on capital, grant opportunities like a National Science Foundation grant for continued work, or just even some of the greenhouse gas reduction grants that some founders were really looking at as potential funding sources that of course are non-dilutive as well. How are you all, looking at founders and helping them to navigate through the metrics during this time?
Yeah. I would just really fast before Shruti, because Shruti has a really good feedback on this too. I'd say one really important differentiation about Symphonic compared to other early stage investors is that we are generally investing in companies that are post-product, pre-product market fit. So the company needs to have launched for us to invest. What that means is oftentimes the founder has gone through an accelerator program like Techstars, or raised some amount of capital, or bootstrapped their business, to get to launch themselves. And so we're actually able to see, and this has informed my background in this ecosystem, is that when the riskiest stages of all is to be that first check to that engineer at Google who says they have an idea and they just need $2 million to launch it. I think those are generally terrible ideas. That's off the cuff hot take. But I do think that, the thesis behind why we invest in companies post product is because that shows conviction, that shows a certain amount of resilience, that shows a certain amount of scrappiness that we are looking for within the founder, that you oftentimes can't check for unless you've given that founder a little bit of time to actually workshop this idea and product to get it to launch.
And then I'll just quickly add, the second piece to your question was how do you help them navigate what is a otherwise kind of fraught time? I think when it comes to raising money and also what's happening politically. And, we talked a little bit about metrics. The other piece is really about how, when we put that check in, when we help them pull their round together, it's also a lot about what is this going to get you? You're going to raise $1.5 million. Can you get to profitability on $1.5 million? And what is your base case? What's your kind of medium case? And what's your aggressive case? And really, I think supporting them on understanding the unit economics of the business, and making sure that as the business continues to grow, that they have control over the business and where it's headed. There's a concept I think that's being socialized right now called seed strapping, where there are a lot of businesses that are raising money kind of at the pre-seed stage, and then getting to profitability, generating, $3 to $5 million in ARR, and then going on to raise a much larger Series A. We actually have a couple companies in our portfolio that have very much adopted that strategy, and I'm a big fan of it, because I think it really does give the founders a lot more control over the destiny of the business, and also gives them the opportunity to really focus, and build something that people really find valuable.
And now you all also are committed to investing in companies that are serving overlooked, underserved communities as well. And we also know that the language has changed pretty drastically when we look at the last few years in terms of what that looks like. I think so many firms, especially just impact investing firms that I've worked with over the last year, have been very concerned about things like language and how do we stick to mission without then becoming targets for these campaigns against things like diversity, equity, and inclusion. But how do you all ensure that your investments, be it climate tech, or kind of the broader range of the investments that you all make, how do you all ensure that directly is directly benefiting the communities that you all intend to serve? And what are some of those unique challenges and opportunities you're seeing that's in terms of driving equitable, solutions, particularly within climate?
Mhm. I think it's such a interesting point around language. And, we have, um, friends of ours in the industry have been really, um, just targeted because of language. And it's just, I think, just as a broader point, as a Black woman fund manager, I think that it is uniquely terrifying. And so I think that's something that we don't take really lightly. The targeted attacks that are happening across different ecosystems. And so I think that I just want to point that out because I think that sometimes gets lost, is that like their real lives, they're real folks who have built some like really incredible businesses who, because of language, are no longer able to actually provide an impact for a number of uh, people, communities, and that's just sad. So I wanted to say that first. And how we talk about it internally is that we're focused on founders who are proximate to the communities that they're serving. And so if you're saying that you're going to serve, you know, rural America, then it makes no sense for you to be in San Francisco. I want to see that you actually live in Minnesota, or you live in, Fort Lauderdale, or you live in, a community that actually represents or is similar to the demographic that you're serving, because we believe that those founders have an outsized insight into actually what those communities need to actually, be able to build something very large and lasting. So that's how we think about things internally.
Absolutely. So we are coming to the end of our time. If we just have a few minutes before we say our goodbyes, I do want to get to at least one of the questions here. Christopher, you asked a couple of questions, but I want Christopher Wilson, but I want to just kind of maybe target one that might be most beneficial for the group. And maybe this is a question for either of you, but what climate tech companies built by folks of color who have projects that are ready and at scale to make an impact in their community and industry, maybe just a couple of, companies that you all either support or will potentially support that we can be on the lookout for?
I can give you one that is a bit later stage, but there's a company based in New York called Black Power. And Black Power started as a business that was really focused on working with under-resourced communities in, I guess, replacing heat pumps. And so Black Power, I think recently their latest round was valued at maybe over $1 billion, if I'm remembering correctly. And they've gotten into kind of doing other types of replacements or kind of adaptation to buildings and homes, and then offering the financing that goes along with it. So that is a company that was founded by Black founders, which I think I look at that company as a model of something that we'd like to invest in at a much earlier stage.
Absolutely, absolutely. We are very familiar with Block Power and their work, so definitely a great company to shout out. Shruti, we are so grateful for you and Sydney for your time this afternoon. And for those who are interested in staying connected, I know there were a couple of questions in the chat that we weren't able to quite get to, but what's the best way for our community to be in touch with you?
Yeah. I think probably the best thing. Oh, Sydney, did you want to hop in?
Oh, maybe. I had to move, so my video is funky. I would say if you're a founder, we'd love to learn about what you're building. We literally, Shruti and I review every single pitch company that comes through the online form. There's no warm intro needed at this firm. And so please do not feel any type of way about filling out the form and submitting it cold. Um, Shruti's in North Carolina. I'm in San Diego. And so we're also in a number of events of IRL in the next couple of months. And so we can also share just kind of like what we're up to online. Really, the best place to learn about that is our LinkedIn page. And so it's Symphonic Capital on LinkedIn, where we try to be really proactive in sharing out just where we're going and when we'll be there.
Amazing. Thank you both. And thank you for everyone who joined us this afternoon. Again, if you have not already, be sure to subscribe at ImpactAlpha.com and be sure to catch Plugged In this conversation with LPs and GPs around this climate tech equity conversation and investing every single month, every first Tuesday of the month. Thank you all again for your time. And Shruti and Sydney, again, thank you for joining us.
Thanks for
Thank
having us.
you. Bye.
Awesome. Have a great day, everyone. Thanks again.